one or two people in our audience are not following football or soccer, so we let's move on to what's happening in the markets.
Oops. Something happened and Kay has been dropped off. Anyway, we will, I'm sure he will, he's just joined back again.
I am so sorry, guys.
It's okay.
Yeah, I did a fat finger there, and so sorry. I'm back.
No worries, no worries.
Something said that we are live streaming, and I clicked to close the box, and I closed the whole webinar. So, yeah. All right, I'm back. Yeah, so let's see what has been going on overnight. And compared to last night, we can say that not a lot really went on, apart from data in China and Norway. But let's see what's happened in the rest of the news. So we had the Bank of Canada Deputy Governor Baudry was speaking last night on the why and how the Bank of Canada raised the interest rates for 25 bps, and the main thing that was said was that they hiked over an alarm. That's the word that was used at household spending and stubborn inflation. So yeah, they are a bit worried about the household debt as well over there. So this is a twofold reason why they actually hiked yields. Then we've already seen banks coming out, the main Canadian banks and some others now thinking that the Bank of Canada is going to go for at least one other one and take the rates up to 5%. That is keeping the Canadian dollar from coming off. But on the other hand, we still have to say that it's been, apart from against one or two currencies, it's been a bit of a lukewarm reaction so far, and we're still holding that 133 figure a quarter support on the dollar Canada. And this afternoon, we do have the Canadian labor report, so that could be your kicker. We're going to have to pay very close attention, because I do think that some of the market players were and are waiting for this labor report to come out of Canada to perhaps press some buttons. And if it comes in with a beat, and especially a good full-time employment report, then I think there is a fair chance that the Canadian dollar continues its march up into the weekend. What else? In Japan, Ueda was talking to the officials again overnight, and again pushing back against immediate moves in the monetary policy, saying that there's still a distance to go before the 2% target is sustainably and stably achieved. He did say, though, that the corporate price setting is somewhat overshooting, which could lead to higher inflation. It seems clear that they are still waiting for data to come out on those wages to start to press the buttons on perhaps YCC widening, changing of maturities, and what else. But it's now widely expected, where there was a big divergence between the short and the medium term calendar spreads, where the people were saying, okay, in the short term they won't move something, but in the more longer term we are pretty sure that they will start to move, and that's been undone lately. So that again now opens the door for a surprise next week. But according to Mr. Ueda, it's not going to happen next week. He's talking about July, October. He's talking about later. Mizuho came out with a piece this morning saying that they don't expect any moves by the Bank of Japan before October. So there's a lot of repricing again to be done right now. We are seeing where the yen pairs were on the defensive last night, some of them. We are seeing them trade materially higher again. Canadian yen, Euro yen, sterling yen especially is one that's really trying to take off. We are in an important zone here as well, as I will show a little later. Elsewhere, what have I noted? Yeah, there was an article out about the British Chamber of Commerce saying that the UK is likely to dodge a recession, but they don't see major growth still in the UK in the upcoming year. But one after the other are calling for the UK to escape the risk of a real recession. Still remains to be seen. We've seen yesterday the European Union finally did dip into a very shallow negative growth for the Q1, I think that was, and but the euro just shrugged it off, and it seems the market is not impressed when it's really turning about the zero level. It showed a minus 0.1% growth also, and it's been shrugged off. And then I think, have you seen anything special in the overnight news, like articles also that we should talk about? Because I really haven't seen that much of new news apart from geopolitics still a bit jittery. By the way, yeah.
Go on. I was going to say not really. It's been relatively quiet. The only thing was the Biden Sunak agreement on trade, and I was talking about this with some of my friends this morning at the gym. Very high net worth individuals, I say, who are really into things. They're not traders, but they are involved in all sorts of things, and we kind of all agreed that Brexit is definitely not the disaster that was called initially when it was voted by many. And you will see, I think, bilateral agreements between the UK and other countries for various aspects of trade, various geographical locations with the UK, etc. So I think in the really long run, controversially, Brexit might even be a good thing for the UK. But in the short term, of course, there is some pain in the beginning. But you are seeing more and more, and I think we will see more and more agreements that make things flow almost as seamlessly as they used to with the EU before. So slowly, I think the UK is going to be having a situation which is more and more positive, and this is one of the reasons why I really like the pound for the rest of the year and beyond, because it's suffered disproportionately over the past few years after the Brexit referendum, basically. So
the issue with Brexit right now is much more an administrative thing than headache than really trade, perhaps. Trade is still going, and there have been some how shall I say, facilitation of some stuff, but mainly the UK companies are complaining not so much about not being able to import or export as trade rules, but as administrative. The administrative side of it is still very tedious, and a lot of UK companies are still complaining about that one. But then, so one last thing that I read overnight is that the US Senate panel approved a measure to strip China of their developing nation status. It can go through as nothing, but the thing is that if you're a developing nation, we don't say the other term that they used to use before, but if you're a developing nation, you do get some preferential treatment in treaties or in organizations, and they have been stripped of this kind of status. So that's another show that the US is really wants to be tough and remain tough versus China. And that brings us to data. We have seen, and while we are in China, we have seen the CPI come down more than expected again, although not that massive, but CPI is really turning negative and flatlining on the year. We've seen the PPI drop also more than expected, also deeper than last month, and therefore, the Chinese yuan has been on the defensive again overnight, and it's holding pretty decent levels. I will show that. And expectations are now for really more stimulus, more rate cuts to come. When will they come? That's a good question. It's probably we are near the end of Q2. It'll probably be a case for the second half of the year, where China may press on more with more stimulus, and that may in turn continue to weigh on the Chinese yuan, at least in the short to medium term, I'd say. And then when nothing else is happening, yesterday those jobless claim numbers really put a little cat amongst a lot of pigeons, and sent the dollar quite a bit, well, quite a bit in the measure of what we are seeing now, sent the dollar lower. It was a pretty decent jump, and it actually jumped back to the levels that we saw before this setback. We had already before that a 260 print. We go a bit shorter here. We already saw this print here in May around 260, and we went back to this one. But if you look at it, it's a pretty decent jump. But then is it a real surprise? We have seen so many companies laying off people or planning to lay off people, and at one stage it has to filter through into the numbers, right? Now, yesterday the dollar was already a little bit on the defensive. I think the market is trying to manage their positions, adapt their positions into next week's CPI and FOMC. We were trading at decent levels. We then had both the Bank of Canada and the RBA surprise. So I think it's a whole package of what we have seen this week that sent the dollar a bit weaker on those jobless claims. So that for that. And then later today, later early this morning, we had this Norwegian CPI surprising, and that we'll have a close look at the Norwegian kroner, because it is breaking levels now to the top side of the Norwegian kroner, where we had very strong channels, and the Norwegian kroner weakening materially. Now it does feel that we may have turned the corner there. Also, the major Norwegian banks are now expecting the Norges Bank to go further than planned earlier in the year. So now they're expecting the Norges Bank to go well above 4% with their rate hikes. I'm looking at my sheet, and that is about what I've noted for what's happening in these markets today. Do you have anything else, still?
Not really. It's been very quiet, which is not a bad thing, man, for a Friday. Seriously.
Yeah. So okay, let's dive into the prices then.
Yes, sir. Bran, you have a direct bloodline to John Adams. Seriously? Wow. We should call you like Sir Bran or something. Or your Royal Highness, no, something like that.
The Royal Brandness.
Yeah.
Okay, the 10 years. Hang on a minute. Is that correct? Is the 10 years trading at 375 or higher?
375, yeah.
Oh, okay. Then it just adjusted. It seemed at one stage that my trading view was showing that we were trading above 380 again. That was a clear mistake. So it must have updated this very second. So yes, we capped around there in the 380s. We've already mentioned that. Stel mentioned it. It's been mentioned on F.A.C.E as well. We're capped there. Yesterday's short-term bond issuances didn't really give anything special for the dollar, at least. It didn't create any big waves. We've seen actually those yields come off And also on the even on the weekly jobless claims, they had a bit of a dip yesterday, but now we are stabilizing here. It's really going to be decided by the CPI. Yeah, what we are doing in those yields. It's really all about the CPI next week. And of course we know, and of course the FOMC will be a big event. It's undeniable that the FOMC will be a big event. But as we've been saying, and as I've been saying also in the room, CPI could be the bigger one, and why not, you know? And so if you look at the 2 years, it's really narrowing. We are narrowing this range anywhere between 460 and 440. That's going to be decided on Tuesday CPI. Personally, I don't really expect us to. Okay, we can move out of the triangle because it's very sharp, but I don't expect us to trade anywhere below 445 or above 460 or so today. I mean, unless we get some news. So I'm more in for a rangy day today, possibly with the dollar remaining just slightly under pressure because of this managing of the books, and we see that in what's happening in the cable. We see that what's happening also in the euro dollar. Euro dollar went up above those little prior highs here, and we went up to 107.80. 108 for me is your first port of call. Is it strong enough to break above today? I doubt we are going to break ranges today, but we may have a look through it. Now, since we've broken this channel, it's still a pretty steep one. This one I think is going to be your next level, if ever this flies over the course of the day. 108, 108.60, 108.75 could be reached, but again, I already think that 108 is going to be a tough enough nut to crack. 107.30 is your underside, 30.40. If you get back below there, perhaps a little move back down to 107 or so. But I do expect the euro dollar to be relatively stable. And as I said yesterday as well, I think the euro dollar is more a tool of doing crosses than anything else, or at least half more than the other currencies actually moving against the dollar. And we see a few of those euro crosses as well, being a little bit lagging the rest, I should say. Cable, nice move. We still think, and me included, still think that sterling. Oh, let me kill my squawk. Still think that sterling has some pretty decent elasticity, as I call it. We moved through these prior highs, a little bit of a spike. But there are a few levels waiting on top, right? And I doubt we're really going to break levels ahead of the weekend. 125.80, 126 the figure, 126, 25.30. There should be levels that we watch on the top side. 124.95 figure. That should be your level to watch, the first level to watch on the downside. It is relatively quiet. The last couple of hours, really, we've been turning around this 125.40. We don't see too many setbacks either, so that does tell us that sterling is still pretty well bid. We see the euro sterling still being a bit under pressure, and that I expect. If we expect an equal reaction from ECB and Bank of England, this could just continue to gently slide. Then, of course, next week we will have a closer look at it. It's going to be about the difference in speech, the difference what they both say. As I said yesterday, I think I have the slight impression that we have seen the best of Lagarde's hawkishness, and that she might start to slowly speak a little bit differently, but we'll see what she says over the ECB. So this one, for as long as we are below 86, 25, 35, I'd say it's still in for a bit of a gentle slide, and I think Stelios has roughly the same opinion on the sterling as I have right now.
I do indeed, by the way.
Okay. Yeah. All right. An interesting one here, and that's more linked to UEDA. Well, the combination of the sterling behaving well and UEDA again overnight, it's sending the sterling into the top end of this wedge. It's been really behaving very well along this support line on the way up. We've already done a very decent move, as you can see here. That's about a 10% mover. So we have already done a very decent move, and we are running into good levels here. Whoops. Why? I did update it this morning. So, oh, this level, this line has disappeared really. So we are here. We're here in this 175, call it figure to 65 zone. That's going to be a pretty important zone here, and then of course it's very close to the top end of what we've seen lately. If you get a move above, then there's not a lot that's going to stop this up to 180. I'm still very positively oriented towards this one. I bought smalls again yesterday, and I like to even load up more if we get a retest of this underside here in the 173s. I do think there is a possibility that it goes up a bit more, but we have to respect that 175 1065 zone, right? So that on the day-to-day we are banging our head against it, I should say, and so that's a pretty important one. If you start to go back below 173.5, then it's probably time to rethink this. Dollar yen.
Can I sorry to interrupt?
Yeah.
Just want to answer. Mike says, isn't Europound building a bottom around 85.50? Yes, 85.40.50 I think is a huge range. There's a support area, let's say. It could hold, but I think 83.50 is the next 83.50 is the next stop. So it is kind of trying to hold there, but if you you know, if you look at the consolidation now, it's trying to build the bottom, but it's not really bouncing. So it's not looking too strong at the moment. But yes, you're right about the level.
Yeah.
Sorry about that.
No. But look, we have trying, and we have broken this trend line, right, from 2022. So
Yes.
it could be important enough, right?
Yes.
And if you start to go below these 85.5, then, well, there are levels to watch on the way down. It's not going to go in a straight line. Euro sterling never goes in a straight line. Yeah, there is a decent possibility to go revisit some of those lower levels. Indeed. Right, dollar yen yesterday. We went a little bit below on the opening of the Japanese markets early this morning. I tried to catch a knife and I put my stop a bit too close. So I have been stopped out of the leftovers. It was a free trade because I managed it around, but still I'm a little bit disappointed. I have been taken out, but my stop was just too close. That's a lesson again. It's still also respecting the triangle again. We are ahead of the weekend. I'm not sure whether it's possible to break any ranges, but the overall picture still remains in the shorter term into the next week, Bank of Japan for higher lows, sorry. All the while respecting this latest triangle. So I think it's still a range. The rest will be decided, of course, with dollar yields. I think on Wednesday is going to be an important day for dollar yen on the back of the US CPI. If we would get a sticky one, I wouldn't be surprised that before the end of the week we are trading back at or even through those earlier May highs. If in turn the CPI in the US does what it's expected to do or undershoots, then we really have to look at lower levels. I think, well, for a starter, at least over the CPI, FOMC likely, and then before the Bank of Japan. Why not? Why not back to 136s? I mean, the yen is volatile enough when data come out to do 200, 250 points. And also the other crosses, we've seen the sterling yen. Aussie yen is banging against this one as well, the 93, 80, 85. We are shying away just a little bit from it, but it's quite an important level on the close of the week. So if you want to eliminate the dollar considerations like dollar CPI and stuff, I like to look at crosses, as you know by now. This is an important enough level to look at. Look at this here as well. Okay, it's been traded a lot through, but it's the last spike high before we went quite a bit lower, and we're back. We're back here. There's also enough fib activity here to make it an important enough level. 93, 80, 85 on the Aussie yen. Kiwi yen. Look at this. Here. Fib 85, 15, 20. It's trading 85 the figure. We tried it. We're shying away a little bit from it. That's your close of the week level, I think, which is important enough. And Ueda tells us that they're not willing to start yet. So if ever we get, then it's over to the Kiwi data or the Aussie data or the sterling data to tell us whether we are going to break those levels. But there is a possibility if you open next week above this level, you could see another like 1.5% or so. Why not? So that for some of those yen crosses. Euro yen is a little, yes, it has broken, and there also we went back to this fib here around 150.45. So you see there's quite a few yen levels that are at play right now. If you get above, we could get a close of the week, perhaps somewhere around 153.75. But again, on the euro, I'm personally a little less inclined to really have a lot of euro positions right now, because I have a little bit of doubts on what can happen over the ECB next week. Yes, they will hike, but what kind of hike will it be? I have my doubts a little bit. So I'm going to stay away from this one. Let's look at what's happening in those metals then. 1930s gold, it held. It held. We tried, and it held. So now we're back to the middle of this, into the middle of the range. It's been a pretty decent rejection down there. But equally, I think 75.80 may be already enough for if we get there for this week in gold. So to me, we are still more in a range play in the short term than really going for breaks. I think that is going to be decided by Tuesday's CPI. And on silver, you're here. We're here, 24, 35, 40. And then if you want to have real confirmation, 25, 24, 60, 65 perhaps. But as we've been saying on the show, to me, it's holding pretty well, despite what we saw those yields creeping higher earlier in the week. I think this has been holding pretty well. So,
do we have any idea what the 3.5% move yesterday was? Because it did outperform. And it makes sense that it outperforms gold, yeah, let's say, on the way up. But why by that much? I didn't see any news, anything. Must have been just pure flows, I guess.
Yeah, it must be people who were trying and then seeing perhaps that they were like sort of hedged on their position and then saw the yields coming down down a bit and then jumped back on it. And it's a bit strange as well, as you say, because we haven't seen any economic data supporting a good like manufacturing or whatever, or unless we missed something. I haven't seen any real data supporting a silver move like this. Perhaps one of the producers, I don't know. There's always talks about shortages and stuff, but if anything came out, I really missed it. But
Well,
fact,
the deficit is there, and it's been there
yeah,
for a couple of years now.
yeah, but it's been there as well.
Yeah, exactly. I mean, the move kind of accelerated yesterday after the jobless claims number, which is a bit perverse because, I mean, this is, jobless claims being high means the Fed's going to hold, which means that rates are not going higher, which means the metals are going higher. But that also means that, less people have jobs, which means productivity goes down, and the silver is an industrial metal, blah, blah. It's kind of, as I say in my macro analysis about silver, it's a curse and a blessing for silver to be both a monetary metal and also an industrial metal. You can have arguments for both sides, no matter what the data comes out, which is a bit weird. But anyway, yeah.
I'd say we've been saying that for this one to really take off, what we need is actually a slowing CPI, and then economies who are doing relatively well. Then this is going to really shoot, because then you're going to talk a bit again about EVs and green and whatever, and all the things that silver is used for, and then talk about the shortages and stuff, and then this one is really going to take off. In the meantime, though, I still find it holding pretty well. It's a bit the sterling of the metals.
Yes. By the way, thank you, Adam. Our friend Adam says Newmont announced a halt of operations at Peñasquito mine in Mexico, largest silver mine in Mexico, and Mexico is the largest producer of silver on the planet. So that will have been the reason for the outperformance. Thank you. I missed that completely.
Yeah, me too. Thank you very much. Thanks very much.
See, we learn something every day. That's good.
Exactly. Okay, moving over to the Norwegian kroner. It's breaking, huh? It is breaking, and we are on the 55 DMA right now. Euro Noki, it's breaking the channel we've been in since November. And yesterday we were talking about this 1172. We have seen every time we were touching this the bottom end of this channel, especially here around 1120. How many times this 1120 has been tried and holding, and before we really did the last leg higher. But then again, we did a spike to 1190, came back to 11.5, and again it was holding. This time there's a change. We are breaking this 1173, 72 zone. The support was around 1172 on this trend line, and this is fine. This has finally broken. Perhaps Norwegian central bank still selling Norwegian kroner, but once the market gets underway, those amounts like 1.3 billion is like about 100 million euros only, right? So that can be easily absorbed by a market that is turning around, and it looks like this may be the case. As people know in the room, I'm trying to see if it really breaks. This morning I missed the CPI, but then I sold it a little bit lower here around 1166 or so, and I'm trying to see if we can get at least back to 1140-ish. Of course, we need to respect here 1149 or already, I would say 47.5, 49. But I think it's worth a try, it's worth a try. Up here, this one should be a support, then back down into the 1135s, where we find the 100-day moving average as well. Dollar Norway, yes, it's also, and we can argue it's broken under 11, the prior top. So that is also already a sign of a reversal. We have broken. We are below this one as well, below the 1088. That's another sign. But now we are trading around here, and I'm not 100% sure about the dollar. So for the time being, I prefer to express it in euro NOK. But if I see any signs of weakness, or if US CPI comes off on Tuesday, I may actually add dollar NOK to it. But it's a bit tough for me to start to sell after a 5% move down already. So, but yeah, signs are there. Still, signs are there on the Norwegian.
Yes. Both, I mean, the euro Norway you showed that is breaking, and the dollar Norway is there. I really want to short them. The only problem I have is for the dollar Norway is CPI and the Fed next week.
Yeah.
So I think I'm going to go in with maybe a quarter size just to test the waters and see what happens.
Yeah,
Actually,
I think
I might do that when we finish the flow show. Actually, yeah.
I've done it in euro NOK because I'm not yet too sure about the dollar side of things, to be honest. But let's see what happens. What's happening in emerging? Oh no, I wanted to show the Aussie. So the Aussie broke through this trend line, but it's not really a massive break yet. It's more like a horizontal kind of type of break, and since this trend line is going to come down and down and down, of course it's broken above. It's trading around 67.05, 07 right now, but we are struggling, and I was talking about the 67.25.40 zone. We are struggling around there. It really needs to break, I think, above 67.25.40, and again we may have to wait for next week's CPI in the US to confirm this. But if we really get above there, then I think we will be on our way to 68.15.30 again. So that for the Aussie dollar. If we start to fail, or if CPI in the States hold up stubbornly next week, then you look at the other side is 66.80 for a starter, but I think the main one here is going to be 66.35.40. If that gives, then we are likely going to retest lower levels. But because by then as well, I think the Australian Central Bank rate decision is going to be sort of traded already, you know, and then we are going to really focus on the US, on ECB, Bank of Japan, Bank of England, you name it, right? Right, over to the EM currencies. Quickly on the Chinese yuan, I've got really small in there. It's about a quarter position as well. It's not, and a quarter EM position is not even a quarter majors position. I use different amounts and different measures for EM currencies because they tend to move a little bit more. But it's already holding 711. It's also a popular PBOC fixing level right now. They fixed in the 711s, if I'm not mistaken, the dollar CNY. We've had those weak data. We have those expectations for rate cuts, or at least RRR, more RRR cuts, and we have the geopolitical situation where it's still not sorted. We will see though later in the month. I still don't have the dates. I forgot to look them up. When Blinken goes to China, see what comes out of there, of those meetings. But for the time being, for as long as 711 holds, already in the short term, I guess there's a fair chance to go to 720 at one stage. Dollar rand, the rand is doing very well, and we are back below this 1880, and we saw a bit of a round of stops, I think. Yesterday I tried to catch a knife, as I said, and I'm gonna risk like and again it's a small, not even a quarter position, to be honest, a small position. If we close the week above, and I will wait for CPI as well, if we are above here by then, and the CPI remains a bit stubborn in the US, I think it can go back higher. Then I will press a little bit more. I have a very tiny position, and my level of no return is here, 70, 72. If it goes through 1870, I'm out. Not going to cost me much, but I think it's worth trying to trade the level at least. It's worth a try. And that's roughly it. Yeah, yesterday the Mexican data were a bit weaker, the CPI, but then we went up into this 1740s zone on the dollar mix, and we are not yet able to really start to correct. Perhaps US CPI once more, but for the time being, I'm relatively neutral on there. But you know, the level I'm watching on the downside, right, is 17.25 is going to be a biggie for me at least. Have I shown everything that I wanted to show? S&P still trying to make up its mind, but it does remain positive, right? And we can't really go down too much. People are talking about 42.30 for a retracement level. This one is an important one for me, 43.11. If we start to push through there, I think then FOMO could really take over and push higher, because the positions are still of nature that either people try to counter trade this, or the bigger accounts don't have as much as they may want to have in normal times. So it's really still a case of, can this really go down a lot more than back to 42.30 or 41.85, 4200 perhaps. Yeah, 4200 is going to be a big line as well. But for the time being, it's hard to see this really come off. Still, any other comments?
Not really. You've done a sterling job again. Oh, Sterling. No, we covered Sterling. You've done an excellent job, mates. No, I don't have much to add.
Okay, then. We are going to wish you a safe Canadian jobs report and a very pleasant weekend. Thanks very much for being with us all the time. And we talk again on Monday.
And thank you for all your feedback, for being here. It's really a pleasure to be here. Thank you, Kay.
Thanks, everybody. Have a good weekend.